As the U.S. dollar weakens, countries that peg their currency to the greenback are fighting a losing battle. They are coming under increasing pressure to ditch the dollar. Let's go now to Michael Whitney on the markets desk for the story. Michael?
Good morning, Scarlett. It's really kind of a moving target to find out which countries peg to the dollar. It's everywhere from the Turkmenistan manat to the Trinidad and Tobago dollar to some big countries like the Saudi Arabia, the rial, and also the yuan in China. What's happening right now as the dollar weakens? They are fighting inflation. Every day they come in there, they buy dollars, and they're selling their own currency, giving it less and less purchasing power for their citizens. Take a look at these numbers, and it's pretty stark if you look at some of the CPI numbers out of these countries that are pegged to the dollar. Saudi Arabia up 4% year on year. Looking at Venezuela up a whopping 29%. Countries like Kazakhstan with their currency, the tenge, they're trying to maintain this peg. They have CPI increases of around 4% monthly. So these guys are fighting a losing battle as the dollar weakens to keep up the purchasing power of their citizens in terms of their local currency.
Let's not forget about the Hong Kong dollar either, at about 7.76 to the U.S. dollar. How serious is the threat that these countries will actually abandon their dollar pegs?
Well, the threat is certainly serious, but it's not just whether they abandon the peg, it's whether they start diversifying assets, and we're seeing that. The dollar's dominance as a reserve currency is still unchallenged. It's about 60% of world reserve holdings, but as they diversify away, they're selling dollars. This puts more and more pressure on the dollar. Look at China alone. They've increased their gold reserve holdings 78% year on year. This is continuing to happen and will continue to put pressure on the dollar, Scarlett.
All right. Thank you so much. Michael Whitney over at the markets desk.